market. All right, so I want to believe you can see my chart. Please just indicate yes if you can see my chart. I just want to be sure that can you see my chart? All right, thank you very much. So we will be starting off the analysis, the technical analysis on the dollar index. Now, the dollar index is a very important tool when doing a technical analysis, because from this index, you're able to see what the dollar is actually doing. And since the dollar is one of the currencies, in fact, is one of the major currencies that every other pair, most times, most of the major pairs are paired with. So it's always very important to have an idea of what the index is doing. So on my chart is the dollar index. So we are currently looking at the dollar index. So what I usually want to do is to see on the long term what the index is doing, where it's coming from, and where it is currently. So if you look at the dollar index, this is on D1. So we are looking at the dollar index on D1. Now you notice that the index has been in an uptrend. So for the entirety, for the month of August, and also for the month of September, we have seen an uptrend in the dollar index, which is went to the upside. So because I am using D1 for this particular analysis, each candles that you see on my charts is a daily time, is a daily candle. So which means each of these candles are activities for a whole day. And each of these demarcations that you see there are monthly demarcation. So we can now currently see, we can see that the market has gotten to a peak. It has gotten to the high of February. This is the high of February. No, in the month of February, this was the high. Let me just clear my charts. So this year is a high price that we recorded in Feb. And then the market has gotten to that level. Now, at this particular point, we can say that the dollar index has gotten to a major resistance. We are currently at a resistance level where we are now. So there's something that we should expect whenever we hit a resistance like this. We should expect a reaction. Now, that reaction could be a retracement, or it could be the beginning of a reversal. But looking at the fundamentals that have dropped on the dollar for the past 3 weeks now, very likely that the dollar will continue in an upward direction because there's strength visible in the dollar. So whenever we have gotten to a key zone, just like we have brought now, you can see on the chart, what we should expect is a slight retracement. So the market will usually retrace before proceeding higher. So at the point we are, we expect a reaction which is likely in. Now, the question most persons will be wondering is like, how far should we expect the retracements to go? In order to gauge that, we'll be using the Fibonacci. Fibonacci is a tool that helps us to gauge or helps us to measure the extent to which a move can retrace. Where we are currently is where we expect that we should begin to see slight decline in strength. And if that is the case, then we should also expect that the retracement is inbound. All right, so let's now drop down to a much lower time frame. Let's page 4. Now, on the H4, I want to see the extent to which a retracement is possible or the retracement can occur. So what I will simply do is I will measure the current movement. Now, take note that on the H4, this is movement for the week. So for this current week we are in, we are seeing this massive movement. So this is the movement we currently are seeing on a Monday. Yesterday, this was the movement that occurred yesterday. Today, we are still in this particular trend, but like I said, we're expecting a slight retracement to the downside. What I will do is I will draw my feed, waiting to catch the retracement. So this is what I'm expecting. I'm expecting a retracement to the downside, and then possibly after that, a push to the upside. I'm expecting a retracement to the downside, then a push upside. I'll be drawing my fee, and then I will mark the area in which I am anticipating the market to retrace to. So let me give this color so that we can see where I'm. So I'm using this now to mark my fee and where the possible areas I am expecting it. All right. So which means this is what I want to see. I want to see the market retrace all the way down to around this region or a move continue. I also take note that something is going to, usually we are almost at the end of this month. Month is almost ending. The month is ending this. So what normally happens in the market is you will see less movement market till the end of the month. Towards the end of the month, notice that most of the currencies will begin to place a little preparation for the new month. And so that is what I am currently expecting, a slight retracement on the dollar index before a continuation. If you look at where we are, we can notice that this is a clear uptrend. So with our retracement, now I have just drawn a trend line. I've drawn a trend line all the way from points all here. So which means what we are looking at is a kind of a retracement all the way down to my trend line before we proceed, before we continue higher. So I am looking at a situation where the market does something like this. So this is what I am expecting on the dollar index, a retracement around 50% of last week's low price. Now this level I have marked here, this level in green, is actually the 61.8%, 78% of the Fibonacci, which is a sweet spot when measuring retracement. So with that said, expecting retracement on the dollar index, we now move to Euro USD. So the first currency we'll be looking at is Euro dollar. All right, so we are on the Euro USD. Now, Euro USD has been in a downtrend, a confirmed downtrend. And if you look closely, you notice that we have actually broken what we call the previous days of the previous week's low price. So currently, we have broken below yesterday's low, where we are now. What do I mean by yesterday's low? Now, this is what I mean. This was the lowest price from yesterday, this point. Was the lowest price from yesterday. That is the Monday's low price. And we have just broken below it, which is ideal. So just like we were expecting a retracement on the dollar index, I am also expecting a kind of retracement on the Euro USD. How far are we likely to retrace? Now, if I draw my fib, then it means that I will be expecting a retracement all the way to around this region on the fib. So these areas where we are looking for a retracement to is actually an area of strong resistance in the market. Because if I trace this red line, now watch this now. Once I trace this red line, notice that that region around the area where we see multiple touches from the market on several days. So you can see if I draw this, extend it, you notice how the market has been touching this particular area, bouncing off of this particular area. So what's happened is I'm now currently expecting that a retracement should occur, which is going to look like this, movement possibly to that upside before we proceed or before we come downside. So usually I like to catch or trade retracement because in my opinion, I think it's the best way of entering trade. So what do we have here? So we have a movement that we're expecting to get all the way up here for withdrawal. So what do we do at this point? Now, there are two options. Remember, it is a retracement that we want to catch. Overall trend is to the downside, which means much preferable to sell than to buy. But at the interim, what I would prefer to do is I would prefer to set a pending order at this price, which is a pending order at the sell limit. I prefer to set a sell limit at 1.06. So I'll be setting a sell limit at 1.06250, noted by the green line that you can see on my charts. So let me make that line bold. So noted by this green line on my charts is 1.06250, the sell limit. And my stop loss will just be above yesterday's high price, which is 1.06500. So my stop loss will be at 1.06500. 1.06500. Around that region as the stop loss. Let me change the color to red. All right, so the red line you see on the chart defines my area of stop loss, and then the green line is my sell limit. Now, some persons might be wondering, how long now? Do we need to wait all this long, for the market to get to that point? Another option would be we can buy to sell. There's what is called buying to sell, which means you can buy all the way up there. You can buy all the way up there with the intention of selling. So if that is the case, the small lot size, I can enter a buy trade, an instant buy where we are currently. So my instant buy will be at the current market price with a stop loss at with a stop loss at 1.05400. The 1.05400, that is the stop loss. Or let me reduce that. I have a smaller stop. So 1.05450. So 1.05450, that's the stop loss. And then an instant buy where we are currently. They take profit at 1.06250. So I'm expecting the market to go all the way up to that point. So we can buy from where we are currently all the way up to 1.06250 with a stop loss at 1.0540. To take note of what I have just done here now, it's a short-term buy. We are not buying long-term because it's already a downtrend, but we are waiting for a retracement. Our best entry will be the sell limit placed at 1.06250 with a stop loss at 1.06500. And they take profit. So the sell limit, the take profit should be at, let's give it, the take profit should be at 1.5450. That is my TP. So that is the middle trade, a sell limit at that price. But at the interim, for those of us who still want to at least take a trade for today and not wait till that limit is hit, you can take an instant buy all the way up to that price. Now, the reason why our stop loss is where it is because we are trading actually against the trend. So, which means we are entering the trade, minimal lot size, small lot size, small stop loss, the target at 1.6. All right, so let me just quickly go through the comments or the chats. Someone is asking sell limits. Yes, the sell limit is at 1.0625. And then the stop loss is at 1.06500. All right, so someone is asking, is there any update on USD JPY? You can look at that. You can look at USD JPY. TP for Euro USD is 1.05450. Now, one of the things that you might be wondering is, why my TP at that particular price? Why am I looking at a TP at that particular price? Now, to get the reason why we we are expecting market to get to that price is, if you look at the D1, this is the D1 now. The D1 is the daily time frame. Now you notice that where we have programmed or where we have placed our take profit, which 1.05450, actually a level of great support. Now look at it. Look at the area we have placed our take profit. This area that I have just shaded as red. So look at this area shaded as red. That is the area where we are taking our profits. Now, even though there's a high tendency for the market to break through, but before the market gets to this region, area, labeled as red, this red area in red, we want to be out of the market. So that area is a very strong support for the Euro USD. And so we want to be out of the market before it gets to that price. So most likely, maybe by the end of the week, get to that price. But like I said earlier, there should be a retracement. We are expecting that market retraces a little before we go down to that particular region. All right, so let's now look at another instrument. So we have just looked at Euro USD. So usually, whatever we see on Euro USD is likely to play out on the pound USD. Maybe not to the extent we see Euro USD, because pound USD has more peak value. It moves faster when it comes to coverage of its peak. Usually, we should be expecting a similar movement on pound USD. And so the next instrument I would like us to also consider is gold. So we are currently looking at gold. So on the D1. So first I start with the D1, see what the market is doing or what the market has done, on the higher time frame. So what I will do on gold is I will simply just mark certain levels on the charts. So I am marking the highest price from last month and then the lowest price from last month. So you can notice, you can see the two lines on my chart. This is last month's high price and the last month's low. We are just in between the prices of that particular month. What should we expect? We can actually say on the higher time frame that gold trading more in a range. So at this point, we will be looking at much lower time frame to see what is for us. All right, so currently this is the H4. I am currently on H4, and on H4, you can see how the market has traded down. So the gold has moved down below last week's low price. Now this region you see here is the lowest price from last week. Look at it. Like this shaded portion is a low price from last week. What do we expect? Whenever the market breaks below the low price of either last week or the previous day, there's usually a slight retracement. Now, if you look at this thing I'm drawing, this is how the market moves. So in a downtrend, the market moves in this fashion. A downtrend, market moves in this fashion, then there's a retracement. So what usually happens, once the market breaks below the low, look at this red shaded part. This area here is considered the low of either the previous week or the previous day. So once the market breaks below it, there's usually a retracement almost to that same level before we see a continuation to the downside. This is what usually happens. So once we have broken below a low, then you should expect that there's a possible retracement that is going to occur. The retracement may not be so much, but the market has a high tendency to retrace before it continues in its way down. So in this instance, if I'm expecting a retracement, how far should I or should this retracement go? Now take note that the use of the Fibonacci will help us have an idea of the extent to which a retracement is possible. So if I drag my Fib to last week's high and last week's low, then I should be on the weekly basis, then we should see a retracement possibly all the way up to this. Now, it should not be strange because the way gold moves, this movement can actually be accomplished within a day. So it's not a strange thing that we should expect a retracement all the way up that region. All right. So this is on the H4. I'm expecting a retracement all the way up. But we may not want to hold our trade that long. So most of us are day traders. So what we are interested in is, just short movements within the market so that we can take profits before the day runs out and then prepare for another day. With that in mind, we will now drop down to a much lower time frame to see best opportunities that we have available for us that trading a day. So looking at this now, my retracement should most likely be all the way up to this. So for those of us that will be trading intraday, take note, I said up here, our best stance. This is where we have the highest opportunity. So this is what I mean. I mean, we want to see, I am hoping for a retracement all the way up to this region before I now begin to, or before I start hoping for a drop. Now, why this particular region? If you look closely, you will notice that we have something like a gap, not something like actually a gap in the market at this region. You can see that we have a gap at this particular region. Now, gaps are also referred to as liquidity points, where the market is always attracted to. Most times, once you see a gap like this, then just have that at the back of your mind that the market is usually attracted to that particular gap. You may not get there the following day, you may not get there the next day, but that point is a part, a region that the market will always want to fill up before it proceeds on this way down. So for gold, I will be anticipating a buy on gold. And if you look, you notice that we are almost like in a downtrend, so gold has been going down. Now, if you look at the higher time frame, which is D1, gold is actually in the range. It means our buying or selling as of this particular moment, top 10, top 10. So on gold, I will be buying. So let me see where we can enter a good buy trade. So I think we are almost there. So on gold, I will buy, instant buy right now. So I'll be buying at the current price. I'll be buying on the current price. And then for those of us that are interested in taking profit maybe by the end of the day, my take profit be at, I'll buy at the current price, and then I'll place my TP at 1920. That is 1920.00. So my TP, I will display that in let me use a green line. So my take profit, green line that you see on the chart. So let me change the blue line. It's the blue line that you see on the chart at 1920. So my take profit is at 1920, and then I'll be placing my stop loss just at 909. My stop loss is at 909. So I'm entering at the current price with the stop loss at 909, and they take profit at 1920. All right, so give me some minutes. Let me go through the comment and see what currency are you present. So this is gold. I am looking at gold. Currency we are looking at right now is gold. All right, so please give me a few minutes to run through the chart. So we are currently looking at gold, and like I said, I am anticipating a retracement on this instrument, which is a movement up, then before we see to the downside. So currently, we're in a position where we can take a buy, take profit all the way up here, and just stop loss below. That is my position on gold. All of this is in line with what we have seen on the DXY. DXY, which is our currency index, which is the dollar index, is already at a resistance, like I said. And having gotten to that price, expect a slight retracement. Now that retracement, slight retracement on the DXY can cause massive retracement on the currencies. So if you look at how the DXY moves, the movement on the DXY, very small, very, the distance move, very small. But you notice that that small movement causes very mighty or very huge move on Euro USD and on gold. The slight retracement we are hoping to see on DXY, like create retracements that we should be expecting on Euro USD and then on gold and then on pound USD. All right, so that is it for Euro USD and then for gold. Now, let's now look at USD JPY. So somebody was suggesting that we look at USD JPY. So on USD JPY, you notice the massive uptrend. Currency has been in an uptrend for a very long time. Yeah, so one thing we want to do is to drill down to the lower time frame, maybe the D1. So this is currently, we are at D1. Now you notice that the USD JPY is moving towards the highest price of 2022. This point I have just marked is the highest price 2022. So there's a high tendency that this instrument will break above that high and create a new high. What I mean is something like this, or we see possible drop or a possible retracement. So there's a high tendency that we might just continue higher. But if you look closely at the movement of USD JPY currently, notice that the moves, are not as strong as the previous months. If you look at the previous months, see good, sizable candles, sizable candlesticks. But if you look at the current month we are in, the movement on USD JPY is not really that strong as you would expect. It's actually moving up, but the sizes of the candles are very small, which means the market is more in a range as it's moving. So what this simply tells you is that strength is diminishing on this move to the upside, which would only be explained by, which we can now expect that there's likely going to be possible retracement before a continuation to the upside. So at the level Euro USD JPY has reached, as the level USD JPY has reached, I will not suggest a buy. I will not advise anyone to be buying at this current price because USD JPY is at an overbought zone. It has gotten to a level of overbought. A buying at this point might not be valid. So what you want to see? What you want to see, a retracement also. Now, this is an example of the kind of retracement you want to see at this region, downside. So you want to see movements in this fashion before you jump in to buy. Or something like this. Look at this. Something like this. It drops to the downside before you jump in to buy. Or something that looks like this. Look at this. The whole of this side is a movement to the downside. So this is the kind of thing you want to see before you buy. Now, also look at this. There's a movement to the downside here. You want to wait for the market to do something of this nature before you buy. So every time the market drops like this, that is a good opportunity for you to buy. The reason why we want to be buying USD JPY is because fundamentally, Japanese yen has been very weak and is still weak, still very weak. And we see a lot of strength on the United States dollar. So even at the stage where we are on the USD JPY, there are fears that the Bank of Japan can intervene. There's what is called bank intervention, where the banks come in to sell the dollar and then create massive movement to the downside. So there's that fear that such a move take place in the market caused by Bank of Japan. So because of that, you notice that for this month, the USD JPY, even though it moved, it didn't move as much as it did previous months. That is why it's always best, once the market has gotten to this level or this high, always wait for a retracement. A retracement is something like this that I have shaded on my screen in blue. You want to see massive movement to the downside or you buy again. Massive movement to the downside or you buy. Massive drop to the downside like this, you don't pay no buy and then like this. So at this particular stage, where should we be buying if I'm to buy? So I will most likely be expecting a retracement all the way down to this region. So I'll be expecting a retracement all the way down here, or I will jump in to buy. So take note on USDJPY. We'll be waiting for a buy, and the best position will be when we see a major retracement on USDJ. I know some of you might be wondering, what if we sell all the way down? Yes, it's possible. We can sell all the way down. But looking at the current state of USD and the current strength of the dollar, I will not suggest a sell. Now take note that because of the great weakness in the Japanese yen, even when the Euro USD is placing, you may not see a similar move. It may not be so visible on USDJPY. I've observed that. All right, so you will notice that even when there's a massive movement, which means when there is strength, when there's a retracement on Euro USD, you may not see commensurate move on USD JPY. Because USD JPY, the JPY is actually very what we'll do is we're waiting for a retracement down before we now proceed for our buying. So on USD JPY, I do not have any entry on USD JPY. All we are doing is, all I would suggest is we wait for the market to drop. I want to see massive drop on USD JPY before we jump in buy. Now, I won't suggest you sell on USD JPY because the reason I won't suggest a sell on USD JPY is because if you look at the movement in the previous weeks, it has been very small, something like this. Look at this part, very tiny, small. So small. So USD JPY can just be moving small, squeezing traders all the way up. So it is usually best in this where it is current, best to wait for the drop. While you are waiting for that drop, there are other instruments we can focus on and catch a good one. I would suggest we look at other instruments that can give us better or high probability than USD JPY. All right, so what I have just said about USD JPY is my observation over time on this particular currency pair. Mostly after the drop, that's when it's best to enter the trade, or you never know when that drop will occur. Because even when the currency is supposed to drop, it prefers to squeeze traders before it finally drops. So you can place a sell here, and USD JPY will just continue to go sluggishly, slowly, very tiny candles all the way up until finally it will drop. It's best to just hold on. All right, so let's look at AUD. Did I say AUD? AUD USD. Or let's just take USD. Let's look at US 100. Let's look at US 100. Okay. So this is US 100. Sorry, let me clean my charts. So that just give me a few minutes in my charts. All right. So this is US 100. We are currently looking at US 100. What do we see? What do we expect on US 100? Now we notice the previous move to the upside. In previous months, we can see the massive movement to the upside, and where we are currently, like we are forming something that looks like a head and shoulder. Now, what is a head and shoulder? Look at the pattern I'm drawing on my chart. So we are having something that looks like this. Look at this pattern. Look at this pattern that I have just drawn on the chart. So this pattern is what we refer to as head and shoulder. So there is a head, which is this center part, upper part here. And then we have the left shoulder and the right shoulder. Now, whenever you see this kind of pattern, it's a strong signal that the market is likely to reverse. So there's a very strong possibility of a reversal of the trend. Now, what trend are we referring to? I am referring to this trend, this movement to the upside. So the movement to the upside that you see here, whenever you see this pattern, there's a high tendency of a reversal taking place. Also, look at this week. You can see this movement to the downside. I am referring to this region. Look at this movement to the downside, and then you see where the market kind of ranges within this region for a continual moving higher. So right now, we have gotten to this point where we are also seeing possible, we are seeing this range, which has given us this head and shoulder, showing us that or telling us that there's a high tendency for the market to reverse. At what point should we be selling? So currently on this particular instrument, best to consider a sell rather than buy. So our selling will be when the market breaks below the neckline. And what do we mean by the neckline? The neckline is this region shaded in green. This is the neckline. What that means is whenever you see this pattern form, and take note, this is a very strong pattern because this point here is this daily monthly high. This is monthly high on each of these time frames. This is a month. This is the highest price for this month, lowest price for the previous month, highest price for this month of July, and then highest price for the month of May. So we are expecting that the US 100 most likely continue a downtrend. Now, at this juncture, we will now drop down to a much lower time frame. So I am currently on D1. I will now move all the way down to H4. Let's look at the H4 and see what we have. All right, so this is H4. So you can now see that on H4, the whole of last week we were moving down, and so for now we are almost at this area, which is the neckline of our head and shoulder, which we saw previously. So we are currently at the neckline. Now, whenever the market is at the neckline like this, what should you expect? You expect a break of that neckline, which means you expect the market to break through that neckline. Now, some persons might say, but this area is a strong support. And if it's a strong support, then we should expect that the currency should retrace from this point. Now, before any retracement, what would usually happen is a break of this neckline. Once the neckline breaks, then it's very possible now you can now begin to look at possible movement to the upside. But until the neckline is broken, there may not be any movement to the upside. Also, a break of the neckline, it suggests a continuation of the downtrend. That is one thing you must always have in mind. Break of the neckline suggests a continuation to the downside. So for this particular instrument, I will be looking at rather than buy. So just like we always say, for US 100, your capital should be reasonable before you go into trades on US 100. All right, so let's now drop down to a much lower time frame to see possible entries. So where should I be entering my? So for US 100, I'll be taking a sell. Where would I possibly want to buy? Want to sell. What I will just do at this point is I will be waiting for the market to get to that price. So I will wait for the market to get to this price before I sell. What price is that? I'm waiting for it to get here. Now, the reason I want the market to get here so I can sell from there is I want to be able to place my stop loss above this high. Look at this high here. I want to place my stop loss above this high. So the closer I get to this high, the bigger or the better, the easier it is for me. So I'll be entering my sell trade at 1488. I'll be entering my sell trade at 1488. Let me enter at 14885.00. The blue line you see, that's the entry price, 1488.00. And then preferably my stop loss will be above this high. So I place my stop loss above this high. And that stop loss will be at a position of 149.5. I'll make it red. That's my stop loss. Remember, this is M5. So this is M5. So the distance you're seeing on M5 is not really much. So and then my take profit will be at so my take profit will be at 146. That is my TP. So my entry is at 14885. My stop loss is at 14965. My take profit is at 14650. So I am expecting this kind of movements to the downside, something like this. There are some persons that might be impatient. They might just want to take the trade now. If you can enter the trade now, listen carefully to this. If you can take a sell from where it is now, and you are comfortable placing a stop loss above this high, then you go ahead. But if the stop loss placed above this high will cost you much, then it will be best to wait for the kind of retracement, wait for a retracement to around this region so that you can set a stop loss that will reduce the amount you're risking or the market goes all the way down. So the best option will be for a retracement to this region before you sell. Now, this retracement is not going to take much because we know how US 100 moves. It's not something that we say, can I wait for that long? So let me quickly all right, so that is entry for a US 100. All right, so someone is saying retracement on Euro USD already in profit. All right, so for those of us that took a Euro USD, yeah, we should already be in profit by now because the retracement has already started. So what you do is once you have taken your trades, it's always best to break even. Now, what do I mean by break even? Break even is where you now move your stop loss below your entry. For instance, you're buying. Let's say you are buying at a particular price. Let's say this is the price you are buying. And then your stop loss is somewhere placed below like this. So let me change this color to red. So your stop loss is placed somewhere below and you are buying at this particular price with the hopes that the market will go all the way up. Now, once the market puts you in about 15 pips profit, break even. Break even is where you now move your stop loss from beneath and then place it above your entry. So once you are in a profit of about 15 pips, or let's say 20 pips, always ensure that you break even on your trade. Move your stop loss. If you have entered a buy trade, Let's assume this blue line is your position where you place the trade. Then your stop loss is below your entry, signified by this red line. You are expecting the market to go higher. Once the market has moved in your position about 20 pips or even 10 pips, some persons will wait for 10 pips, but usually maybe within 10 to 20 pips profit, then move your stop loss from beneath your entry and place it above your entry so that you can secure your trade. At that point, your trade becomes risk-free. There is no more risk on that particular trade. And however the market moves, you will not have any loss. There will be no more loss. So your target should always to be that once you have entered it, ensure that you are securing your profit. So that no matter the movement that occur in the market, you don't have any loss on that trade. So you can see that it is actually possible to trade in such a way that your trade becomes risk-free. And the good news about the market is it always gives us that opportunity to break even. It always gives us that opportunity to move our stop loss to a point where we will not be having any loss. So take advantage of that and always ensure that you do that. All right. So on US 100, I am currently waiting for a retracement to this level up here, 14885. Now you can decide to set a pending order at that price, which is a sell limit pending order at 14885. Or you can just wait for the market to get there before you proceed. Enter trade. All right, so let me look at some comments in the chat. Someone is saying, please, your Signal group WhatsApp. I don't have a Signal group. Thank you for explaining. All right. Okay, so I don't see any questions in the chat group or in the chat section of this. So I think we have taken a couple of currencies. So please, someone suggest one more currency we should look at before we round it up. All right, so we've already discussed USD JPY. So I've talked about USD JPY. And on USD JPY, I said, I'm expecting a movement to the downside. This is USD JPY. I want to believe you can see my chart. So I said, I'm expecting a movement to around this region. So the movement is, I am expecting the market to move all the way down to around this zone. Now look at this zone marked in red. So I'm expecting movement down to this region before I will be considering a buy. And someone was saying, what if we sell down to that region? And I said, with the characteristics or with the behavior of USD JPY, I would not suggest a sell that region because that movement there may not occur today. So it is best to just sit on the sideline and observe. And it's also good, once a currency is not really giving you a clear entry, it is best not to disturb that instrument. If an instrument is not giving you clear entry, don't disturb it. Allow sleeping dog to lie. Leave it. Go and look for other instruments that you can easily analyze and trade. Currently, USD JPY is very tricky, very, very tricky, because currently at an overbought zone. And there's a high tendency that at this level it is now, drop. But with the strength of the dollar and the weakness of the Japanese yen, that drop may not really occur. So it's just not clear. I personally will not be trading USD because the whole analysis on it is not just clear. So I would prefer to just leave it, allow it, maybe within the week, either by Wednesday or Thursday, I become clearer. That is my own view, SDJ. But the other currencies I am giving you entries on are good to go, those instruments. You are good to go on the instruments I have just given you. We have looked at USD JPY, we have looked at gold, we have looked at US 100. All right, so at this point now, let me take your questions. We have 4 minutes to go before we round up this session. So please drop your questions comment, anything you want us to touch. All right, any questions? All right, so someone is saying, I asked a question on using currency strength indicators to compare, observe trend. This question is not clear. Compare, observe trend with respect to retracement. Your question is not really clear. I know of currency strength indicator. In fact, I have some currency strength indicator I consult from time to time. But I don't understand your question as you're linking them up, as you're linking currency strength indicator to retracements, and I don't understand. Please make, Mr. Charles, make your question much clearer so I can understand what you mean. Okay, someone is asking if Mr. Gideon is asking, can he, the questions are coming fast. Okay, Mr. Samuel is asking, can I buy and sell the same instrument the same time with the same entry price? Yes, you can. You can buy the same instrument at the same time, at the same price. You can. But the question is advisable. Not. So you can do it, but it is not advisable. Now, the reason why it's not advisable is because once you do that, you are hedging your account. So you will rarely see any profits from such a move. It is best to enter in one position. Secondly, it will be difficult to enter at the same price because of spread. The spread, when you buy, you will be buying at the at price. And when you place a sell, you are selling at the bid price. So it is impossible, or it will be difficult for you to place a buy and sell at the same exact price. So it is possible, but it is not advisable because such method of trading rarely generates any reasonable profit. Why? Because once you place a sell and your sell trade is in profit, the buy that you have taken will be in loss. And any year you close your trades, it's the same thing as not even taking the trades at all. So it is not advisable, even though it is possible. All right, so the next question is, what is the effect of indices? All right, this index, now listen, if someone is asking what's the effect of indices if the dollar is strong. Now, these indices or this index, they are actually stocks, that have been merged. So when you are trading an index, not have it at the back of your mind that you're trading composition of different stocks. Now, what normally happens is this. If the value of the dollar is strengthened, then there's a high tendency that the value of stocks, and if the value of the dollar is weakening, then the stocks. Now, the simple example to that is this. When the dollar is weak, these companies or these stocks, remember that stocks are actually existing companies that are in existence. They will want to focus more, listen to this now, they want to focus more on their businesses, expanding their businesses and so on. Now, but if the dollar is strong, then it means that if you buy the dollar and then you just keep it in the bank, then the value of your dollar in the bank will appreciate. So most of these companies would prefer to keep their bulk or their amount or their money in the bank to gain extra or to get the interest rate on that amount. So whenever that happens, there's a high tendency that the value of stocks will begin to, because most of them or more dollars will be kept rather than used. That is because the value of the dollar is appreciating. So it is not 100%. This thing I have just said doesn't occur all the time, but most of the times that is how it works. If the dollar is appreciating in value, then you should expect that your indices or your index also, or your indices should appreciate. That is what it is. The currency. All right, so thank you very much, ladies and gentlemen. I am looking at a lot of questions. Unfortunately, we do not have enough time to go through all of them. Someone is asking me to share the currency strength with us. All right, so thank you very much. So, you can always, now for those of us that missed some part of the lecture or the class, you can always go to our YouTube page to watch the recorded video or the recorded session. So I want to thank you once again for your time and happy trading. Thank you very much.